Hi everyone, how are you all doing? I hope you're doing well and welcome to another episode of this blockchain related series. Today we will dive deeper into concepts like miner, wallets, nodes, SPVs and stuff like that because if you watched the previous episodes, congratulations, if you managed this far, you are pretty familiar with the blockchain ecosystem. But now let's dive deeper into those concepts. Let's move into the notepad. So, let me write here what we are going to look. We're going to look at nodes, miners, wallet, and SPV. And you are already familiar with the blockchain ecosystem. Okay. So, just like a small recap, if you know, like the blockchain is a distributed ledger, so basically we have transactions and they are all connected with blocks. Let's continue. So there is this endless chain, endless list of transactions that they are here like ordered chronological. And you also know that in the blockchain technologies we have a network of computers. Let me actually zoom a bit like that. We have a network of computers. And if you don't know a node, let me hear. A node is basically a computer in the network. So nodes. Oops. Nodes. Aye. Jesus, my handwriting. Nodes. And a miner is a very specific type of node. It is a computer that can add blocks to the blockchain. So this is a miner. Miner. Not my best handwriting today. And the miner has the ability to add blocks to the chain, while the other blocks, the nodes, they're just regular computers, are just validating the network. And each of these computers has a copy of the blockchain. And let's just like some recap, because I don't think I mentioned what are wallets, because I just assume that most people know what a wallet is, because you probably use it if you've been into crypto trading and stuff like that. Probably into crypto. I like to explore more the technical stuff about the technology and explain it like in these kind of drawings. But if you have a wallet, let me actually write another color. Wallet. In a wallet you have basically a public key, a private key, and you have like the amount, the balance of stuff that you have, like the coins that we were mentioning. Actually in Bitcoin is a bit different, but for just like simple terms, you have like some kind of amount there, and you can send and receive in the wallet. So let's imagine that you do a transaction. Let me write here in a different color. So you want to do a specific transaction, and you are, let's say, this node in the network, and you want to send from A to B. Basically, your transaction will be added into the blockchain, into the network, I must say, and it will spread all across the nodes. But it's still on an unconfirmed state, because like actually it's in a place called mempool, but you don't really need to know that. I just remember the name because I think of memes, and so it's an easy name to remember. So it is in this mempool of unconfirmed transactions, and each node will just like basically see, okay, does this make sense? This transaction makes sense, because if I'm trying to send, let's say, 1 million coins that I don't have, this will be automatically rejected by the network. But if it's something that it makes sense, it will keep spreading across the network. And if you watch the previous video, you know what is proof of work. So you know, here's a miner. Actually, I think I made it red, right? So here we have a miner, and here we have the blockchain. And this miner, in order to get rewarded, because if he adds another block to the blockchain, he will get. Then this is from the previous video. So if you are not familiar with this, go check it out. You have block reward, and you have transaction fees. So he has a lot of incentives to add a block into the blockchain. And your transaction, it's in this. Let's assume it is your transaction is in a mempool. So it's basically a place where there are a lot of unconfirmed transactions, and your miner is here adding it to this block, and through is trying to guess the nonce over and over again until he makes it the correct guess, and he can add this block to the blockchain. And only at this point, when the block is added to the blockchain, is that this transaction becomes confirmed state. So this is basically, and it's time for the final concept, and that is called it's called SPV, and these are basically smaller nodes. Let's imagine this. Let's draw another network. So there's another network here, and let's make it, I don't know, light blue, if this is a light blue. So SPV is basically a small node that is connected to a full node. And just remember that each of these full nodes has a copy of the entire blockchain. But because that occupies a lot of gigabytes, a lot of space, if you're using, for example, the wallet in your mobile phone, the thing is you're probably using a SPV, because an SPV is basically a smaller node that doesn't have a copy of the entire blockchain. So you're probably thinking, so how can you validate? Well, it basically is associated with a full node, and it is not associated to only one full node, but it's basically querying data across multiple nodes until it thinks that it has the right information for that specific transaction, and so on and so forth. And that's it for today. I hope you learned something new, and we'll see each other next time. Bye.